Hi, my name is DRC Raming Jr., and this video will answer some of the frequently asked questions about Arawak X platform, primarily how it works, what's required to do it, and some of the inner workings of it. So, first of all, let me welcome you to Arawak X website. As you are probably really well aware, it's really difficult to raise money in the Bahamas. To have made it this far, you probably have attempted to get yourself a bank loan and have failed. But that's okay. Um, do not worry, there is another type of financing available for you, and that's what we're going to be discussing in this video. So, how does crowdfunding and SME financing work? So, what it does is it links multiple investors, both in the United States and in the Bahamas, and it works over a platform that is regulated by both the SCB and the SEC and allows businesses to present themselves, present their pitches to these investors, and therefore raise money. So we work with companies primarily looking between $50K and $3 million. And the way that these deals are structured is that it allows you as the business owner to maintain control of your company. So what are the benefits for business? It's great for companies which can benefit from market exposure. So what we mean by that is it's very public in nature. So this is not really going to work for companies that need to do a private raise because the deal is or the project is very sensitive in nature. So it works really well from companies that could use all of the exposure because it's going to be a very public process. Companies must be looking to raise that money for growth. So use that money to grow at least 5 to 10 times. More is better. And also, it works really well with companies that can be systematized. And what that means is if the process requires you, the master, to be a master at something, and your business revolves around your innate ability or skill, it's difficult to systematize. So those businesses don't work well. So what's the benefit for investors? Investors have new investments. They have the ability to use their money and put it into work in new and creative ways. Also, by coming into the platform, there's structure, and the structure allows the companies to, one, to have a better chance of success, and two, they're structured in such a way that investors are protected. And we do that through contracts. Also, all businesses that list with us will have to outline a dividend policy. And what that means is that when the investors have put their investment in, when the business is successful and you get paid, they get paid. So everybody wins. So the startup financing cycle. So if you're new to finance, or if you're new to this kind of business cycle, you would know that businesses go through different phases. They're kind of like people. So at the beginning of a business, there's this valley of death. And this red line is just basically revenue or profit. And what this red line means is that so when you start the business, you start losing money, then all of a sudden you get some sales and you start making money, you break even, and then you go up, and hopefully later you go to an IPO, which is to take it public. So that's the cycle for businesses. Where we fit in is we fit in right at the beginning, right when the company has an idea, is properly structured. It may or may not be making money, but the idea is properly structured. So we deal with ideas pre-revenue is what we call before it started making money, as well as post-revenue, but at the beginning. So there are really two types of companies we work with. And so pre-revenue companies are also called seed financing companies. And it's usually a business that has a prototype. So what that means is, or is looking to launch a prototype. And what that means is that some businesses require that you have to put a large injection of money in before they can even get the idea rolling. So, for example, if you have to do a prototype of a new type of boat, for example, there's a lot of development cost. So that would be seed financing. So the investment here, from the investor's point of view, it's more risky because you haven't proven any sales yet, or any because you don't have a product. So in these instances, expect that any investor that's looking to come in at this point is going to be looking to buy 30 to 40% of the company, depending on the valuation. So it's important that you keep that in mind, because this is also about managing your own expectations as the business owner. The other kind of company that we work with are first round or Series A financing companies. And this is a company that has proven business. So it has customers. It's likely broken even. So it has made some money, and it's really looking for investors to grow and to scale. And this is a less risky company than, say, a seed financing company, because it has customers. So some of that risk is taken out. So in this case, the business has a little bit more leverage, so it can look to sell, or investors can look to buy 10 to 30% of the company. And of course, all of this is going to depend on the valuation. This is an important slide for understanding where you fit in the grand scheme of things, to make sure that your expectations are managed. It's going to be difficult to raise money, especially as a seed financing company, and you have to understand that any investor you speak to is going to be talking these kind of numbers. So what is needed for crowdfunding? To crowdfund, we need these 7 things. The business has to be incorporated, so it has to have its own separate legal identity. You must have a business plan, pitch deck, or sales video. You got to have your financial projections together, because that's going to be very important for the valuation. So that's balance sheet, profit and loss, also called an income statement, and cash flow statements. And it's also, you're going to need some sort of web presence, both as a website or a blog, preferably both. Social media presence, so marketing, as well as some sort of customer acquisition plan or marketing plan. You have to know how you're going to get more customers. And then you have to have a clear use of funds to fuel this 10 times growth. The investor that is looking at you as a business understands that you're a risky investment, but needs to justify that risk with a potential reward. So it's important that your company be structured and be on a path for more than 10 times growth, because he has to be able to weigh his risk versus the reward. So how long does crowdfunding take? It's approximately 3 months, about a month of prep, and then 2 months of pre-launch. And the idea is that when you launch, you're fully funded within the next 60 days. So about 3 to 5 months. So how do we hold everything together? We keep everyone on the straight and narrow through all these legal documents. So there's a lot of legal work that has to go in, and all these documents have to be prepared. And so when you sit down, if you decide this is the path for you, you sit down and meet with us. We can explain them. We take the position that all of these documents are not there to scare you into behaving a certain way, but they're there so that you understand what your rights are and your responsibilities are to your investors, and your investors understand what their rights are and their responsibilities. So it's important to have all of these documents so that, especially because we're dealing with people's money, it's taken care of properly. Well, thank you very much for considering us. We can be reached at 810-0333 or via that email right there on the screen. That's my email. You can email me. Thank you for considering ArrowhackX. And if you are a business that is looking for financing, you can schedule a meeting, and we will sit down and meet with you and see how we can help. So thank you.